Hi everyone, thanks for checking in. It's Adam here at Low & Co, and we're looking at the Wellington market data for the month of March 2026 versus the last couple of years, seeing if we could spot the trends and so on. We are continuing with a very similar theme that we've seen for some time, folks. Values continue to bump along the bottom. Message for sellers is that the fundamentals, the balance of supply versus demand and the duration to sell and these sorts of things, they remain weak, unfortunately. Buyers, it's all good news for you guys. You have the most choice that you've seen for 11 years. So my message to those of you who are out buying is just make the most of these conditions. Please don't wait for things to get better. So let's dive into the detail here. Median sale price in March, 780,000 versus 800,000 a year ago, so down 2.5%. These numbers from month to month, they are a bit bumpy. I wouldn't pay too much attention to a monthly change like that. Perhaps look at that red line, which is the 6-month average, and you can see the broad theme is, as I've been saying for really quite a long time now, we've been going broadly sideways since kind of late winter 2022, so we're coming up 4 years now. In amongst that broadly sideways theme, of course, there are gradual increases, gradual decreases, and so on. The most marked kind of gradual increasing theme we saw before the election last time in 2023. Now that might be of interest. Pay attention to those of you who are thinking of selling. Everyone thinks bad time to sell before the election. Well, we invite you to consider thinking the opposite to everybody else. Last election, it was a great time to sell. Prices recovered, duration to sell reduced. No reason to think that going into this year's election, it will be any different. Then, of course, after the election, and broadly speaking, since then, so since early 2024, we've seen the market weakening, and so values have very slowly been eroding over the last couple of years. So if you look closely at that red line, you can see that broadly sideways, but awfully slowly, gradually declining value, median sale prices. However, if you watch these videos, sometimes you'll probably know that I don't pay too much attention to the median sale price because it doesn't just indicate underlying values, it indicates also the mix of properties sold. The best guide to underlying values is the Real Estate Institute House Price Index, in my humble opinion. So let's look at that now. Start with the league tables here. This shows on the very right hand column there what have been the movements in underlying values since the peak of the market in late 2021. For the longest time since then, Wellington has essentially dropped further than any other region in the country. That has not changed. We're still down almost 26%. That is not as far down as we have seen it. So we have seen it down as low as 27, maybe a little bit more than 27%. So we've recovered off those absolute lows, but still pretty far down there. Still a reasonable distance between us and Auckland. Auckland's still down nearly 22%. So it really is a tale of two cities. The two cities, Auckland and Wellington, have been amongst the weakest markets in the country. If we look at the last year, similarly, Wellington has fallen further in the last year than any part of the country, but the numbers are way, way smaller. So down 1.8%. So that's consistent with my theme, which I mentioned sort of earlier on, which is broadly sideways, but ever so slightly downwards over the last year. Auckland down 1.2%. The country overall 0.2% up over the last year. Let's call that flat. And you can see varying degrees of softening or strengthening in the different regions of the country. Strongest performer being Southland, and generally the regions are doing better than the cities, and the South Island is doing better than the North Island. Over the last 3 months, in Wellington we've seen a slight recovery, 1.3% versus Auckland's 1.7%, and the country overall at 1.1%. Again, you can see varying degrees of small positives and small negative numbers there up and down the country. The other thing I would say is that that 3-month result for Wellington would be greatly supported by a reasonable bump that we saw in February, which was definitely a bit of a one-off, which we'll see soon. So whether you want to read too much into that positive trend, we'll see as time goes by. So as you can see in the graph there, our values, the blue line is the monthly result, the three line is the cumulative 3-monthly result. We saw a big jump up in February, and then it's come straight back down again, and that is supporting the results in the last 3 months or so. Wellington region down 1.8% over the year, down up 1.3% over the last 3 months there. So across the different parts of Wellington, Pororua, Upper Hutt, Lower Hutt and Wellington City, you can see that over the last 12 months, consistently weak across the board to varying degrees, and over the last 3 months a bit of a mix there, couple of significant positives. Wellington City up 2.7% in the last 3 months, Pororua up 2, Upper Hutt 1.6 down and Lower Hutt 0.9% down. So kind of more mixed results than a consistent theme over the last 3 months at least. And if we look at the Wellington City itself, you see that, as I say, over the last 3 months, 2.7% up, but the last 1 month broadly flat at down 0.1%. Again, you look at that graph of Wellington City compared to Wellington region does tend to be a bit more volatile, but it's broadly following the same theme, and similarly to the region, you see in February we saw quite a big uplift, and it's come straight back down again in the month of March. So it'll be interesting to see what the next few months show us. All right, looking at the rest of the data now, new listings volumes. Again, look at that red line there. You'll see there that coming out of the election, we saw a lot of new listings coming to market. Again, as I sort of indicated earlier, a lot of people think that selling before the election is a bad idea, and so they all sell after the election. That brings a lot of property to the market, which makes it actually a bad idea to sell after the election, because there's a lot of stock that you're competing with. Then stock down, and then up, then down, and more recently we've seen new listings flowing to the market at a greater rate over the last 6 to 8 months or so. So again, that of course is what we don't want to see as vendors. As buyers, that's great news. But 889 new listings in March versus 929 a year ago, 878 2 years ago. So pretty consistent over the last 3 Marches. So on that one basis alone, on that one data point alone, just looking at the 3 Marches, pretty consistent, no change up or down really, but the overall trend in the last 6 months or so has definitely been up. More new listings coming to the market. And as well as being consistent with the last couple of Marches, new listing volume of 889, only just ahead of the long-term average for March, which is 873. So the last 3 Marches that we've seen in terms of new listings flowing to the market have been pretty typical. On the other hand, the amount of sales taking place, which of course is the other side of the market, you've got properties coming into the market, then you've got properties leaving the market via selling, 645 in March versus 794 a year ago and 722 2 years ago. So significantly down on a year ago, down 19%, and also down a fair bit, down 11% on 2 years ago. So again, look at that red line. From the real low points and sales volumes that we saw throughout 2022, we were seeing encouraging signs, encouraging for sellers, generally gradually increasing sales volumes, albeit off a very low base, but consistently heading in the right direction. Then we sort of plateaued at that sort of early 600 sales a month sort of region, and then over the last 6 to 8 months or so we've come off a little bit. So it was encouraging for sellers to see more sales taking place, but more recently we've seen a little softening in that over the last 6 months, as opposed to the supply of new listings coming to the market. So again, as I say, this is the fundamentals which are looking kind of weaker rather than stronger, not what we want to see as sellers. And not only are sales volumes sort of easing off a little bit over the last 6 months or so, but they are well short of what we typically see long-term average in March. So 645 sales in March this year versus the long-term average at 819. So that's a good 20% down. So again, just to labour the point, we're seeing new listings flowing to the market at a healthy rate. We're seeing properties selling at a significantly reduced rate compared to what is normal. So again, these fundamentals are not that encouraging, unfortunately, for sellers. How long is it taking to sell? So it's still taking way longer than average, but significantly down on those really long durations that we saw in January and February. They were really quite scary, up there at around 60 days or so. So back down to 45 days in March, but that is still quite a lot longer than we saw the last couple of Marches. 25% longer than last March at 36 days and 13% longer than the March before in 2024 at 40 days. And again, look at that red line, that average, the 6-month moving average is consistently increasing over the last, coming up to 3 years now. And at 45 days, we're also significantly longer than what it has typically taken for properties to sell in Wellington in the month of March at 34 days. So reasonably consistent theme coming through here, guys, and that is that the fundamentals of the market are still pretty weak. Inventory, 16.9 weeks worth of inventory. Now that is more than we've seen for some time, really, probably with one exception, I would say, more than we've seen since early 2023. And at 16.9 weeks, more inventory than the long-term average of 15 weeks, and way more inventory than the average that we've seen over the last 10 years or so, which is at about 10.6 weeks worth of supply. Trade Me listings. Folks, we have more listings on Trade Me than we've seen for 11 years now. So I still get buyers saying to me, oh gee, I've not that many listings coming on this month or the last couple of weeks or whatever. If you are a buyer and you are relatively new to the market, and you think that conditions are not that great, unfortunately I've got bad news for you. These are the best conditions you've seen in 11 years. So as I keep saying, please don't wait for things to get better. It is unlikely they're going to get significantly better. Anyhow, number of Trade Me listings, 3616 as of a few days ago when I'm recording this, versus 3420 a year ago. So that's 6% up on a year ago, and 3040 2 years ago. That's 19% up. And you can clearly see from that graph, not only is that red line sort of bumping up and down, but generally heading higher. The blue bar chart you can see there, that is the largest number of listings we've seen in Wellington since April 2015, so exactly 11 years ago. So in summary, folks, values have drifted down over the last 3 months, but in Wellington up slightly in the last 3 months. New listings have been heading upwards, and we are back to kind of March norms now. Sales volumes are down, however, and significantly fewer than we typically see in March. Inventory is above long-term levels at about 17 weeks versus long-term at 15 weeks, and in the last 10 years average of 10.5 weeks. Trade Me listings are up. We have the highest number of listings that we've seen since April 2015. So you can see the consistent theme there, folks. For sellers, unfortunately, the fundamentals do remain weak. This does not mean you cannot sell. It just means if you are going to sell, you have to be serious about it. You have to price the property appropriately, and you have to present it well. Otherwise, it's going to be very, very challenging to compete for the attention of the buyers who are in the market. But of course, for buyers, this means you've got huge choice. It's a fantastic time to be a buyer at the moment, getting amongst it. So thanks as always to Real Estate Institute and to realestate.co.nz for the data. And thanks, of course, to you for checking in again. If you want individualised advice, of course, reach out. Happy to help. Adam at Love & Co. See you next time.